News out of China overnight gave world financial markets the jitters. The Chinese have reduced backwards their target for export growth from 8% to 7.5%. Now that doesn't seem like much of a reduction. However, when you consider that 8% target has been in effect since 2005, this does actually reflect quite a significant change in Chinese outlook. This, coupled with poor data in terms of business performance in Spain and Italy, really did give world markets the jitters. And this was particularly reflected on currency markets, where we saw a flight away from risky currencies, of which the Kiwi is one. The Kiwi was down to around 82.11 US cents and fell by nearly 1.5% against the yen. It goes without saying that it was also down against most of its other major trading currencies. Looking at the share markets, the local markets were actually closed by the time the news came out. The NZX 50 was up slightly and the ASX 200 was down a little. However, the Dow really felt it, being off 40 points overnight. And in terms of European and Asian markets, the story was similar. Over the last couple of weeks, I've talked about some of the inputs into the agricultural sector. In particular, I've talked about labour costs and oil costs. Today, we're going to look at electricity. Recently, a report was released called the Dairy Advisory Electricity Report, which was a joint venture between MAF, Fonterra and the EECA. It was based on a survey of 150 dairy farmers across the country, and what it found was that the average dairy farmer consumes around $14,000 worth of electricity per annum. In perspective, across all dairy farms, that means that dairying consumes around 2.3% of the total of New Zealand's generated electricity. The primary output of the report, however, was around energy savings, and what it said was that dairy farmers could save up to 16% of their electricity consumption with a payback period of 3 years, rising up to 28% with a payback over 5 years. Putting this in context, that's around 68 million kilowatt hours, and that equates to roughly a quarter of the output of the Roxburgh Power Station per annum. If we can actually achieve these savings, it's got to be good for farmers' back pockets, and it's got to be good for New Zealand Inc.